Today we're going to break down a pretty interesting swing trade setup for Micron Technology, ticker MU.
Okay, but before we dive into any of the juicy numbers, let's get the really important stuff out of the way. This is purely for educational purposes, all right? It is absolutely not financial advice. You've always got to do your own homework before making any moves.
All right, so let's set the stage. We're talking about a stock that has been on an absolute monster run, rallying more than 300% over the last year alone. Just incredible.
But the reason we're looking at it right now is because it's actually taken a bit of a breather. It's pulled back about 10% from its all-time high, and that little dip, well, that could be a window of opportunity. And here is the real kicker. This is the part that makes you lean in a little closer. Despite this insane AI-driven rally, the stock is trading at just 8 to 10 times its forward earnings. I mean, that is surprisingly low.
Which, brings us to the big question that this whole analysis is trying to answer. Could Micron actually be the most undervalued, the cheapest AI play on the entire market right now?
So here's our game plan. We're going to start with the big picture, this AI memory crisis. Then we'll see how that's fueling Micron's profit supercycle. After that, we'll look at the chart's key levels, walk through a specific trade setup, and finally, we'll cover the risks, because you always have to know the risks.
Okay, first up, the AI memory crisis. You have to understand this part, because it's the powerful tailwind pushing this entire story forward.
So the core idea here is simple. AI is gobbling up so much high bandwidth memory, or HBM, that is creating a massive structural shortage. The evidence is just, it's everywhere. Micron's entire 2026 supply of HBM already sold out. Done. Industry analysts are seeing DRAM prices jump almost 95% in a single quarter. And maybe the most telling sign, spot prices are 130% higher than contract prices. That means those contract prices have a long way to go up.
So you've got this massive shortage. How does that actually translate to Micron's bank account? Well, that brings us to what the analysis is calling Micron's profit supercycle. And man, just look at the speed of this growth. It's staggering. After a record-smashing first quarter at $13.6 billion in revenue, the company turned around and guided for an even bigger explosion in the second quarter. We're talking revenue jumping to $18.7 billion and earnings per share rocketing up 76% in just 3 months.
But the one number on this slide that just screams, we are in a peak profit cycle, is this one right here, the guided 68% non-GAAP gross margin. That kind of profitability shows insane pricing power, and it flows directly from that memory shortage we were just talking about. And this slide really nails the key disconnect, the whole point of this thesis. You've got all the other AI darlings, your NVIDIAs, your AMDs, trading at these sky-high PE ratios of 25 plus. And then you have Micron just sitting over here at a tiny fraction of that. The argument is that the market is still treating it like a boring old hardware company, not a key player in the AI revolution. Okay, so the fundamental story is pretty powerful, right? But as any trader knows, timing is everything. So let's pull up the chart and see what the technicals are telling us about the key price levels.
So the analysis really zeroes in on two key battlegrounds. You've got resistance up ahead, near that $438 all-time high, and the peak around $455. But the real area of interest for this setup is down here, this primary support zone around $391. That's the spot.
So what the chart is basically showing us is a really strong long-term uptrend that's just taking a little breather right now. And according to this analysis, these are exactly the kinds of moments that can offer up the best risk-to-reward opportunities. By the way, if you want to really geek out on the chart, we've dropped a link to the full technical report down in the description.
Okay, so let's put it all together. How do we take all this information and turn it into a concrete, actionable trade plan, especially with that big earnings report coming up on March 19th? So the plan laid out here is to be patient and use this current pullback to get in, ideally somewhere in that $380 to $395 support zone. You define your risk right away with a stop loss at $355. Now here's the really smart part. The first target is a retest of that $438 resistance. If it hits that, the plan says to sell half your position, and this is key, move your stop loss up to your entry price. Just like that, you've got a potentially risk-free trade on the rest of the position.
And this is absolutely critical, so listen up. Given how much this stock can swing around, you have to be smart about your position size. The methodology here suggests risking no more than 1.5% of your entire portfolio on this one trade. Seriously, manage your risk.
Of course, any good analysis has to look at the other side of the coin. It can't all be sunshine and rainbows. So what could go wrong? Let's dig into the risks and the other potential scenarios.
The source basically breaks it down into 3 possibilities. The most likely, the base case at 40%, is that the stock just kind of consolidates and drifts up towards that first price target before earnings. The bull case, with a 35% chance, is a huge earnings beat that launches the stock towards 500. And then there's the bear case, a 25% chance of a market-wide sell-off that pushes the stock down to your stop loss.
And here are the big red flags you have to keep on your radar. First, historically, when these memory cycles peak, it often signals a top for the stock. Competition is always a threat. The stock is already up a ton, so it could just be tired. And maybe the biggest risk of all? Expectations for earnings are sky high, which means there is zero room for error.
And all of this leads to the one critical decision point, March 19th. The analysis makes this crystal clear. If you take this trade, you must decide ahead of time whether you're going to take your profits before the report or if you're willing to hold on and gamble on the earnings announcement itself.
So let's wrap this all up. The core thesis is that Micron is the cheapest AI play out there, and it's right in the middle of a profit supercycle. The big catalyst is the monster earnings report expected on March 19th. The proposed setup is to buy a pullback into that support zone with really strict risk management. And again, if you want all the nitty-gritty details, the full report this is all based on is linked for you in the description.
Which leaves us with one final, big question to think about. Is Wall Street totally mispricing Micron? Are they stuck seeing it as some old cyclical relic instead of the massive AI growth story that the numbers suggest it has become? It's a powerful question to consider, and as always, a final reminder. This has been for your education only. It's not financial advice.